Rupert, when you look at demand for oil, or actually where the price of oil is, so a lot of it will be dictated to what happens with OPEC next week. But overall, how can we be so sure that it's not a lack of demand that's pushing down the price of oil?
Well, I mean, a few weeks ago we were talking about lack of demand and fears around global growth, and I think that has been a factor. But what has really accelerated and partnered with that over the last few weeks has been two things. I think that this realization around the implications of Saudi Arabia being quite a weak position in relation to the United States. I think that this kind of pressure from Donald Trump is clearly a key factor. I think that's going to limit Saudi ambitions in relation to the oil price. They need to keep, in American good books, they need to keep the noise down. And also supply from the US. We've had continued upside surprises on the supply side. So we've had both sides of the market pushing this price fall. I think the key question now is, from the Saudi point of view, what is enough? I think this new level of the price is probably enough to keep things going, to keep, as I say, the sort of keep things quiet enough. But the key is we could still continue to get upside surprises in supply from the US, and I think the global growth picture, frankly, is not improving. So still some downside risk, but clearly it's got to be less than we've had already.
Rupert, when you look at oil down and lower, you look at the IFO index that we just saw out of the conversation in Germany, is BlackRock just framing for a lower inflation than what was expected even 2 months ago?
Well, I think that we are thinking about lower global growth. I think that the inflation response is very long and lagged, and I think that this is one of the key crossing points that we have at the moment, which is I think that the market is increasingly worried about global growth, something we've been warning about for a while, and the market is looking at three things, I think, to try and bail us out of that situation. I think the first is later this week at the G20. I think clearly expectations running high of some kind of pause on trade. I think the market is hopeful that China is going to put a floor under growth and maybe have some positive stimulus that could bail out the global economy again. I'm not so sure that's going to happen, nothing like, at least on the scale we've seen in the past. And crucially, when you talk about inflation, I think the market has already moved to price in a more dovish Fed. I think that is where the risks stand, because, of course, the Fed is thinking about the labour market primarily and inflation picture in the US, which is on a much more slow-moving cycle, and those pressures have been building for a very long time. So there's a risk that the Fed doesn't quite deliver as dovish a message as the market is hoping.